Our next guest is Charles Haywood. He is an entrepreneur and now a farmer, ex-owner and founder of Mansfield King, a leading manufacturer of personal care products, which he sold for 9 figures. He was also a former M&A lawyer in Chicago, and he taught business at Purdue University in Indiana. We'll be talking about business, entrepreneurship, and antitrust laws and the recent news surrounding the buyout and acquisition of Activision Blizzard. Welcome to the show, Charles. Good to host you today.
I am very pleased to be here.
Very pleased to have you. You've got a fascinating background. Who are you? Tell us, introduce yourself to the audience because you're fascinating.
I appreciate that. It's a very complimentary. I have worn different hats over the years, but in terms of professional hats, I started off as a lawyer in Chicago, a mergers and acquisitions lawyer, practiced for 5 or 6 years. In the late 1990s, it was the internet boom and everyone was going to be rich forever and the world was going to be different. And Harvard Business Review wrote about how this time is different. And then, of course, I lived through the dot-com crash. But after that, I realized that I didn't really want to be a lawyer forever, not because I didn't enjoy being an M&A lawyer. Being an M&A lawyer, a deal lawyer is actually pretty fun or can be pretty fun, but I wanted to be rich. I've always been greedy. I want rich, rich, rich. That's all I ever wanted to be. Well, that and good looking, but rich is something more within your control. And so I went back to school. Also, my law and business degrees are from the University of Chicago to get a degree in finance from the U of C. And now when I look back at my finance notes, I can't make heads or tails of them. I'm like, I used to know this stuff, but now I don't understand. Anyway, so that was 20 years ago. And what I really wanted to do was start my own business. So I quit the law and moved back to Indiana, where I'm from. My dad taught at Purdue University, as I did for a while as well, to start my own business. And I worked for another business for a year and a half just to get some experience, and then struck out on my own. I ran a cabinet making business for a year while looking for something grander and scalable, and ended up in buying a few assets, just a tiny fraction of the assets of a defunct contract manufacturing business for personal care. In this case, hair care. I say shampoo manufacturer, but a wide range of mostly hair care products. No customers, no place to put the equipment, just thought I'd have a shampoo business. And then built that up for 15 years and sold it off in 2020. So now I say I'm a farmer, which means I keep some chickens and grow some crops, and I'm kind of a dilettante.
Would you consider yourself retired? Would you use that word?
Well, when people say retired, they imagine some guy with a cane, not the cool, vibrant guy that I am. So I don't like to say retired. But yes, I mean, functionally, I'm retired.
Wait, I'm just curious before further our discussion about business. I'm just curious, you said you wanted to be rich. Well, you're already doing quite well for yourself. You were a business school professor, and then you were you were at one point, like you said, a lawyer. Noble professions. What was rich to you? How did you define rich? Because clearly that wasn't rich enough.
Very specifically, $40 million in 1991 liquid.
Was that? Where did that number come from?
Well, because in 1991, I was 22, and I was actually briefly working in Washington, D.C. as an intern in Dan Quayle's office. And I heard about a rich guy I admired, and he had $40 million. I'm like, I want $40 million. So, and I just stuck with that goal, which, obviously every year you have to adjust that goal because you don't want to cheat yourself by becoming rich in inflated dollars.
Right. Well, I do want to. Well, you surpassed that considerably eventually. So congratulations. I do want to talk about your entrepreneurial journey in just a bit. But first, some recent news. So, in one of the most expensive tech acquisitions in modern history, Microsoft acquired Activision Blizzard, one of the world's largest gaming studios, for $69 billion. This deal was announced 2 years ago. It's been blocked by the FTC, and then now, basically, they've lost a court bid to further block this in July, and so the deal has gone through. Can you maybe sum up for us why the FTC may have sought to block this deal in the first place?
Well, I mean, the FTC's goal is supposed to be, on a statutory basis, preventing, among other things, preventing excessive concentrations in markets as they're defined for purposes of antitrust law. And I think that over time, and this is a long and complex legal topic that began with Robert Bork the failed Supreme Court candidate from the 1980s, who was a university professor at the University of Chicago, who developed modern antitrust law, turning it away from a focus on corporate concentration being inherently bad for society, and away and towards a focus on supposed consumer harm, thus totally altering the original statutory basis for antitrust law. And I think the best person to read on this topic is a guy named Tim Wu. Just W-U is his last name. He's a Columbia, I think he's back to being a Columbia University law professor after serving for a couple of years in the Biden administration. But he wrote a short book, but an excellent book called The Curse of Bigness, which outlines the history and modern practice of antitrust law. So I strongly agree with Wu in his analysis that just as a philosophical, political matter, that what we need is much more aggressive antitrust enforcement, simply because corporate concentration is automatically bad for society, whether or not you can prove necessarily that it harms consumers in the short term in any given instance.
Can you elaborate on that? Do you mean to say that if we were dominated by monopolies and oligopolies, our society would be less well off?
We are dominated by monopolies and oligopolies, totally dominated in essentially every area of industry, whether that's defense, some of which is causing problems now, obviously, with a lack of competition in the defense industry, food. Everybody knows that food and beverages are dominated by a few big companies, and Wu goes through all this as well. But there's almost, and certainly tech, as we've seen, and the example you just give is an excellent example. The gaming world is much more concentrated now than if you define the market as gaming. The market is much more concentrated now that merger has gone through, and that's inherently bad for society. Consumers will pay more. They lie, the consumers won't pay more, but they always lie because they can pay fancy consultants to pretend that it's not true. But more importantly, you have less innovation and you have more political power by these highly concentrated entities to restrict competition in the future. So when you allow antitrust to proceed in a way that denies the importance of eliminating excessive concentration in markets, in the long run, the societal effects are very damaging. And I think it's kind of obvious if you look around. I mean, I use Microsoft products every year, and they haven't improved in 20 years. The basic Excel, in fact, they're worse. Windows, all those things are functionally much worse, and that's a function of too much concentration and not enough competition.
Laissez-faire supporters would say that we should just let the market decide. Don't get the government involved in antitrust laws and blocking mergers and whatnot. If there's adequate competition, they will emerge naturally. How would you respond to that?
Well, I used to be a laissez-faire guy myself. University of Chicago economics all the way. But that's empirically false. It's just obviously false. It has not worked out that way, so therefore it is not true.
Wait, why hasn't it worked out that way?
I gave an example. Like the corporate concentration allows, whether that's in social media, Facebook buying Instagram and buying any other kind of possible competitor, Microsoft having a lock on the Office software market. For example, to this day, like when I use Microsoft Office products, for example, Microsoft Word does not allow you to set a document to open as a page view as a single page. You can do it with a macro, but that's it. This is a basic function that has never been added to Microsoft Word because there's no competitive pressure to make improvements. Instead, what they do is they attempt to squeeze money out of the consumer through subscription models and what have you. So just, if you look around at any industry, you don't see improvement because of competition, because there is so little competition.
Well, at what point in size of a company should the government start getting involved? For example, is there a threshold in market share globally, after which that threshold is breached? Then we should start looking into the FTC intervening. Let's say the company, after a merger, now has 50% market share. That's too big, or 25%. Like, at what point do we draw the line, Charles?
You have two axes. You have the definition of the market, because obviously if you define the market broadly, the percentage is different. But and as you have the percentage of that market. I take a very aggressive tack, but of course I have no power at all. The FTC does not have me on speed dial. But I would define the market relatively narrowly, and that is every market, and I would just automatically require the breakup of any entity that for any reason whatsoever got above a 5% market share, which is a very radical position. I understand that. I think our society would be much better off as a result, because the competition would be vastly more intense.
Let's paint a picture for us. So suppose Apple wasn't, I think, in the double digits market share of iPhones, okay? It was only 5.5%. What would the smartphone market look like hypothetically if we had an even distribution of, let's say, 20 companies, each owning 5% market share globally?
It would look radically different than it does now. You would have less interoperability, though obviously you could have interoperability with open standards without having companies being under the same umbrella, and consumers would have an infinitely greater amount of choice rather than what we have now, which is Apple both dictating these things, the specifics of what you can use, apps, who can have an app, who's allowed to have an app, who's deplatformed from the Apple ecosystem, and so on. You would have much more competition and much more consumer choice.
From a business standpoint and perhaps even an investor standpoint, are monopolies and oligopolies better investments in the long term precisely because they've built a moat and because, well, they dominate the industries?
Well, it's Peter Thiel's argument that as an investor, you want to invest in monopolies. But the fact is that that's bad for society. The point of having a government is to, and people used to recognize this when antitrust law was created, is that for the government to act in society's interest rather than in the interest of a narrow slice of society that benefits financially from one government regulation or the other.
Do you think that innovation stalls when there are fewer competitors in the marketplace?
Absolutely. I mean, there's this big, and so you look at Apple as a perfect example. You've raised Apple. Apple generates all this cash, then uses it for stock buybacks. I mean, this is kind of black letter business school law. Companies with excess cash very rarely use that to innovate. Instead, they end up wasting the money or using it for stock buybacks, neither of which is particularly socially productive, given the fact that it's generated by reducing competition.
On the flip side, an investor might look at the stock of Apple over the last 10 years and say, well, it's been incredibly profitable. So should I be looking at, let's say I were a stockbroker, should I be looking at, broad stroke generalizations here, should I be looking at an industry that is concentrated with a few players or a very diversified group of companies within another industry? Which is probably better for long-term growth, do you think?
Well, if you're as an investor looking only to make financial gains, if you can find something that promises to bring you monopoly profits, that's always going to be the smart bet. I mean, if I was investing or if I as an entrepreneur, certainly that's what, as an entrepreneur, your goal is to drive your competitors out of business and drive them into the ocean and then put gasoline on the waves and keep all the money for yourself. Sure.
Okay, Peter, you brought up Peter Thiel. He also said in a number of presentations that the goal of an entrepreneur or a founder of a company should be to eventually gain a monopoly in his or her domain. As a former entrepreneur yourself, do you agree or disagree with that statement?
Yeah, certainly that should be the goal because that maximizes your financial return. It's bad for society, certainly, but as I say, but as an entrepreneur, that should absolutely be your goal. And I think, as an entrepreneur, I think Thiel focuses on things that have specific moats, a term you already mentioned. I actually think that execution is at least as important, at least in middle market companies, in terms of you may not have a monopoly, but you can easily become the 800-pound gorilla in a middle market industry of some kind, even without having patentable or other technological moats.
In a free market, though, isn't it natural for the most innovative and the most efficient and the company making the best products to eventually gain a monopoly? If you were to take that argument, wouldn't you say that perhaps intervening or instituting some sort of antitrust law would be anti-free market?
We don't have a free market. We have an unbelievably regulated market with huge degrees of corruption and political influence. If we had a free market, that might be true. But if I had eternal youth, that would be awesome too. But I don't got that either.
Okay. So, Charles, what should be done? Ideally, let's say you had a magic wand, 5.5% total market share for every company. So at that point, what happens? Do you break up companies? Do you stop them from acquiring? Do you stop them from? I mean, you can't stop a company from getting bigger now, can you?
Well, sure you can. I mean, you can do both things. You can obviously prevent acquisitions. You simply mandate that they divest elements of their business to reduce it below the market share, and you give them 3 months to do it, and everyone goes to prison if they don't. The end. The problem is lack of will, not lack of ability.
Well, let's take a company that is dominating a market share, not because they've acquired their competitors, but simply because they're making the best product. How do you stop them from growing market share in that particular case?
You split them up into multiple companies. This is trivial.
Okay. Is there any historical precedence of this happening?
It was proposed for the Bell system in the 1980s. although they ultimately didn't follow through that. It was also proposed for Microsoft in the early 1990s, though again, political power prevented that from happening. The Bell system is actually half done. With Microsoft, it wasn't. But so you take Microsoft, for example. Microsoft is a bundle of different companies or Amazon. So Amazon, everyone thinks of Amazon as a shopping platform, but really it's a web services platform with shopping tacked on the back. And so you can take any of these companies and you can split them along obvious lines. And then you can take those obvious lines and say, well, this is kind of one coherent thing. Say Amazon Web Services. And say Amazon Web Services was peeled off from the rest of Amazon, and Amazon Web Services still had 60% of the market. You could just physically force it to be divided into 10 separate companies. There's no reason. I mean, certainly that would create a variety of inefficiencies and lots of friction, but there's no reason you can't do that.
Let's switch gears and talk about entrepreneurship now. You were a lawyer in Chicago working in M&A. Why not just start your own M&A firm? Why go into a completely unrelated field, which is shampoos?
You can't make that much money as a lawyer. I mean, I was making $250,000 when I left, and I was like a 6th-year associate or something. And that's not real money. I mean, that's just the truth of it. I mean, it may be adequate money, it may be more than adequate money, but it's not money in the sense of if you really want to be rich. And being a lawyer it's extremely difficult to consistently get truly large amounts of money, as in millions of dollars. There are a few lawyers who do it. And it's harder even to do it over time, and you're not building any equity. That is, if you die, you don't make any more money. You can't sell being a lawyer. You can't retire by selling your lawyerness or your law firm. It just doesn't work. Professional services, you can't sell the firm in any meaningful way. So that's why not. I like being a lawyer, but it's more risk averse than my personality. Lawyers tend to risk aversion, and that really wasn't something that suited me.
Okay, so then tell us about Mansfield King and the origins of that company, and we can have a discussion about, yeah.
So once upon a time, as I say, I bought these assets from this defunct contract manufacturing company. And those assets consisted of a big stainless steel tank to mix things like shampoo in, small water purification system. Water is the building block of most personal care products, and what's called a fill head, which basically is a machine that fills bottles. And I didn't have a name for this company that I wanted to have, and I didn't want it to be called, like in this industry or that industry, the contract manufacturing industry, most companies have generic names like AccuPack, but I didn't want that. So I picked Mansfield King. Mansfield is my grandfather's middle name, and King it just sounded distinctive and like old money and so on. That was very successful because the name is memorable and so that matters. But so I just started. I went looking for customers, and then once you get one customer, then that's a huge upgrade from having 0 customers, because you're a real business when you have one customer. And from that, I just grew it by word of mouth, essentially, till we are probably, well, we were 50-60 million in revenue by the time I sold it.
Wow, which year was this that you started the company?
2005, and we sold it in 2020. But the crucial thing to remember too is that most people think of contract manufacturing as a low margin business. I mean, we were running 25% EBITDA margins and up. And so it's entirely possible to maintain high margins in contract manufacturing. You just have to not do stupid things like compete on price.
Just to clarify, so you didn't manufacture the shampoos yourself. You were a distributor, or how exactly was the business? Right. Yeah, can you tell us about the business model?
Good question, right? So if you look out at the shelves at a professional supply store, or like Sally Beauty, or you go to Target, something like, almost none of those brands do their own manufacturing. They outsource manufacturing, except for the really low margin, cheap stuff like Procter & Gamble stuff is typically manufactured in-house because P&G is low margin kind of crap stuff. But everybody else who's kind of a bespoke brand or a trendy brand outsources their manufacturing. And 80% of the stuff you see on the shelf, they don't do their own manufacturing. They don't like to say that because part of the mystique is people control their own manufacturing, but they outsource manufacturing to contract manufacturers, people who do it for them, not just the manufacturing, but also the research and development, which is where the innovation and the ability to charge higher margin tends to come in, things like R&D.
Okay, so you would outsource manufacturing to another company in another country, or within the U.S., or?
they outsource manufacturing to me, or did outsource manufacturing to my company. So they say, we want to develop this new shampoo that we're going to sell in salons. And so we develop the product. They typically come up with the packaging. We create the product, put it in the bottles, kick it out the door to somebody else's distribution, and they do distribution. We just do manufacturing, R&D and manufacturing.
I'm still hung up on the why of starting this business. Was there like a significant problem you saw in the personal healthcare segment that you wanted to fix?
Oh no, I just wanted to be rich, and in fact, I didn't care what I got into. The week before, I had looked into buying the assets of a concrete cutting and coring business. You know, the cutting holes in highways for piping and things like that. So I just didn't care. I was just looking for a business to get rich in, and I'd had a year of college chemistry, and I figured that I could make a shampoo business.
Look, as somebody who's as a fellow entrepreneur, I'm not, at your size yet, but I started my own media company this year. But I've done a risk assessment myself. I evaluated the potential of failure versus the potential of success, given my previous background as a news anchor, and I've made the evaluation that the benefits outweigh the costs, given that I've already been in this industry. You hadn't, correct me if I'm wrong, but I think you had no prior experience working professionally in the personal healthcare industry, right? So it was probably a riskier move for you.
No, I had no savings. I had a wife pregnant with our second child who was not working outside the home. I had no rich relatives. I did have these fancy degrees, so I could have always gotten a job. But it seems bizarrely risky in retrospect, and sounds like you're much more measured and smart than me, because I did no risk assessments at all. I'm like, yeah, I'm going to do this.
What was your? I'm just curious. What was your family's response to you quitting a six-figure law job and say, I'm going to start a shampoo company?
Well, my wife always knew that I wanted to and planned to and would. She built castles in the sky. So yeah, she was very supportive. I mean, having a supportive spouse is crucial, because otherwise, obviously, all sorts of problems can result. So I got to hand it to my wife for riding the ups and downs of the train for a long time.
Well, she probably got free shampoo as a result as well. So that was another upside. So you started this company, and then what was your next step? Did you look for a big names to work with as clients, or what was your initial business plan?
Yeah, well, my original business plan was actually to do regulated products that are personal care products that are regulated as drugs, which are like sunscreens, acne products, things like that. But as a lawyer, I thought I could leverage my experience in regulatory compliance into that area. That's a terrible idea, because you can't compete because they're regulated as drugs. The ingredients that go into them are set by the government, and so that area is commoditized, and therefore it's low price bid gets it. That's a terrible idea. So I ended up doing men's hair care just by random chance. I got a contact, and that was our first customer. And then we ended up with probably the largest black hair care manufacturer in North America, men's hair care, like pomade, styling things like that, and a lot of salon hair care. That is brands that are only sold in hair salons as opposed to mass market. But we looked into these things. There wasn't any plan to get into these areas, because it's largely a word of mouth business. Nobody wants to switch manufacturers, because switching costs and risks are very high until they need to switch manufacturers, in which case they need to do it right now, typically for some reason. Then they call their friends, and ask their friends who they use as a contract manufacturer. And if you have a good reputation, then they likely call you. It's just a word of mouth business.
So just to give us a sense of the rate of growth, you said that you were doing $60 million of sales by the end of the business, by the time you sold your business. What were you doing in the first year of sales?
20 grand.
Wow. So, okay. How did you scale up from 20 grand to 60 million? What was that process like?
Well, it had its moments. What made it possible was that even though I'm a terrible judge of character and a terrible manager, I managed to come up with a outstanding team of very self-motivated individuals whom I compensated very highly, and who were self-starters, and I let them do their thing. So while I, of course, set the tone and the goals and so on, I had a very good team, and for the most part, we funded it out of income. So we didn't have to go borrow enormous amounts of money It wasn't a highly leveraged business and so on, to expand our physical plant. And by the end, we had 250,000 plus square feet of manufacturing and warehouse space, and we started off in like 1,200. And so we scaled over time. And that had some hiccups, but it's an execution business. And I always say that being an entrepreneur is simply the ability to get things done. And there you go.
I'm curious as to why you decided to scale organically through cash flow rather than another approach, which is to basically reverse engineer $60 million of sales within the first 3 years, for example, and then acquire funding through VCs if necessary to have the infrastructure set up right away to do that from the get-go. Why different philosophies here?
I don't believe in other people telling me what to do, so I don't want VC money. I'm extremely egotistical, megalomaniacal, so that wouldn't have worked out. But it's also can't be done that way in this industry, or I suspect in most non-tech industries. That is, those people who will support a 60 million business wouldn't even consider looking at you, no matter how good your physical plant is, unless you already have the reputation. And the reputation can only be achieved through time.
Wow, I mean, a lot of startups have just a concept and they're still getting money. How is that possible? How are they doing it?
Outside of the tech world, I doubt that's true.
Okay. You, again, limited experience in the industry. How did you learn about this industry? Was it on the job? Did you do some research? No. Yeah.
No. So obviously there's formulas for these things, and sometimes the customers have the formula. Sometimes you develop them. Our first customer had his formulas, and it was just me. And so I sat in the laboratory and set up making small batches of these products. And the first one I did, it's like cooking. You mix stuff together, and the first one I did was a light blue hair gel, so a jelly consistency, light blue, and I made it. And it was water thin and totally like midnight blue black, total failure of the recipe. And I looked at myself, I'm like, am I really in the right line of business? But I redid it and it came out okay, and I just moved on.
What were the biggest challenges you faced during the scaling process?
Well, it's a service industry. That is, we're a manufacturing business, but what we're selling is a service. And so if you can't meet customers' expectations as regard to service, then they don't want to do business with you, or they dial back the business with you. So when you're scaling, the number one thing is to assure that customers have product they can sell when they need it. Because obviously, if you're a hair care brand, you need stuff. If you've told a retailer that you're going to have stuff on the shelf at date X, the stuff has to be there, or it's a disaster for everybody. So total disaster. So the most important thing was assuring continuity of service to customers while scaling at the same time.
Now, you said you wanted $40 million when you were 22. You were surpassing that by the end of by the time you sold the company. Did you always envision that you would sell this company? Was that like your goal, to make this a saleable asset?
That's a good question, because obviously, I mean, the money was pouring in over the transom, so it wasn't like I needed to sell it. I'm kind of a paranoid. I just assume that we're going to have an economic collapse sooner or later, and probably sooner rather than later. So I think I'm not sure I had a specific date in mind, but I think I always anticipated selling it, cashing out, and then sitting on top of whatever my winnings were, and seeing what happened in the world.
Wait a minute. Let's back up. You said you were always worried about an economic collapse. Why is that?
Well, because I'm paranoid. And my grandfather, who I was very close to, was born in 1902 in the Austro-Hungarian Empire and died in 1997 in Indiana. And he was a refugee after the war. And so I think my family background has made me realize that Americans are sometimes too prone to think that, as they say, past performance is not a guarantee of future results. So I think you look around us and the world's becoming a kind of janky place. It hasn't affected the average American directly yet, but I'd rather relax and sit back than keep running the business indefinitely.
PLC Aeroscience eventually bought the company. Can you comment on that deal? Did you approach them, or did they come to you? How did that happen?
Well, we ran an auction process, and PLZ was ultimately the successful buyer. I have nothing but the highest respect for the PLZ people. We talked to some private. They're backed by private equity, by Pritzker Private Capital. But I talked to a bunch of private equity people, and I have a dim view of private equity people as acquirers. So I was very pleased to, I mean, this, I'm not just BSing. I mean, I was actually very pleased to deal with them, and they've done great things with the company. So it wasn't one of these companies where the PE people come in and strip everything. It's they've continued to operate it here in Indiana very successfully. And so I was very pleased with what I was able to do ultimately with that. And one of the things I did was I took several $1 million and distributed it to employees as well. So I mean, I think the PE model, well, this is a little bit stereotypical, but the PE model of maximizing returns in a short time and then dumping the company to somebody else is not something I would have wanted to engage in if I could avoid it. And PLZ was a very successful buyer, I think.
When, generally speaking, when you pick an acquirer, what's more important to you, just the valuation they assign or the long-term vision they have for your company? Ultimately, it's still your legacy, right?
Yeah, I mean, the long-term vision is important. I think also for me, I did not want to have any ongoing connection. No earnouts. I rejected earnouts absolutely. And as a lawyer, you learn that earnouts are for fools. And I didn't. Yeah, I did, consulted with them for a while in the typical way, but I didn't want to be working for somebody else. I just wanted to take the money and run. So that's what I did.
Okay. You wrote an article, and I'm going to turn to your advice for the young. Incidentally, the title of your article, you wrote several pieces of gems. I pulled out a quote that stood out to me, that you said that in the future, jobs not involving manual work will be hugely fewer in numbers. What do you mean by that?
One of my theses, and it goes along with my paranoia, is that a huge percentage of the jobs that exist in America today are BS jobs, in the words of the late David Graeber, who wrote a book called BS Jobs. Well, it wasn't BS, he used the full word, but what I call email class jobs. Most people, if we're being honest, most of what they do adds no social value and is merely churning. And that's true across the vast majority of industries. Eventually, I think the stupid is going to be squeezed out of that economic system, which means that people who don't add value will find it much harder to make a living, whereas people who do add value, whether that's manual work or something else, will find it easier to make a living and easier to make a profitable living.
Well, this is getting a little bit more philosophical, but how do you define social value?
That is a good question. I think in this case, narrowly, whether you're adding something to the societal pie. So if you have a job where you literally do nothing all day long but move papers from stack A to stack B, you're not adding anything to value, to social value. You're not creating anything new. You're not educating the young. You're not doing anything that provides value to society as a whole. And most jobs are the equivalent of taking papers from stack A and putting them in stack B.
Are you suggesting that manual labor adds more social value, or it's just that it's harder to replace physically right now?
Both. I think manual labor necessarily provides value because no one pays people to do manual work unless it does provide value, unlike with email jobs. That doesn't mean that you necessarily want to be a guy who does unskilled manual labor, because that's never going to be paid high. But skilled and semi-skilled labor, like I have a relative who does architectural ironwork, and he gets paid a lot of money to do that. People want architectural ironwork. So
well, I think that is the ultimate question for young people having a conversation with their parents, with their family, with themselves, is how do I pick a career? Which college degree should I pursue in order for me to maximize my societal value? What should be the decision-making criteria or process going on there?
Obviously, people's personality and talents play a big part in it. But I've seen both sides of the divide. As a white collar worker and as a manufacturer and as kind of a pseudo manual worker, I think you have to make a decision for yourself. First of all, is Haywood right that in 10 or 20 years, white collar paper pushing jobs will be much harder to get at a high paid level because the stupid will have been squeezed out of the world? If you don't believe that, then getting an email class job where you do nothing all day long but push paper makes more sense. If you do believe that it's not going to be around for the long time, as I do, getting something with actual skills makes sense. There are things like being a doctor is an actual skill, right? I mean, it doesn't involve manual work. Being a lawyer is not an actual skill. in a well-run society would only have maybe 5%, that's my figure for the day, I guess, 5% of the lawyers we have now. And people who advertise on billboards would be flogged in the public square. And so, I mean, we just don't need the amount of lawyers that we have now. And that's not a good job for the future, because it's not a good job now, frankly.
Charles, you also wrote in the same article, technology jobs will be fewer because the stupidity and wasteful existence of companies such as Uber, TikTok, DoorDash, Tinder, Groupon, Google, and many others such will have been squeezed out of the system by natural processes or by armed force. Okay, why those companies in particular?
Because they don't add any social value. They're dumb on their face. I mean, most of them are only, like Uber is a classic example. It's probably the least dumb on its face relative to, say, TikTok or Tinder. But it's also, it only exists because of low interest rates and people willing to feed it endless amounts of cash. Uber would kind of fail naturally in a free market, one where the government doesn't manipulate the interest rates and so on. But things like Tinder should just simply be banned by government fiat. I mean, the end. The government should wake up and say, Tinder is now going dark. The end. I mean, that's what I would do if I was king. I'm not king, not yet.
Wait, but I know you're not kidding, but I'm just curious to understanding your rationale here. Well, what societal harm is Tinder doing? Just since we're on the topic,
Tinder destroys the normal. Well, Tinder is a large element. There are other elements as well of the destruction of the natural harmony between men and women that and is an element of creating what is the biggest single problem. And I've been banging this drum long before Elon Musk, the lack of children in the West. And so when you have an app that is specifically designed to create, enhance, and further the culture of casual sexual hookups at the expense of more traditional arrangements, it's bad. It should be ended.
Okay. Is that it should be ended by government decree, where the marketplace will naturally fizzle that out?
No, it should be ended by government decree. The marketplace clearly demands Tinder. The role of the government is to take some of those sweet JDAMs and drop them on Tinder server farms.
Okay, all right. On that note, you also wrote in the same article, don't buy financial assets such as stocks and bonds. You instead advise people to purchase physical, real assets such as tools, land, gold, and guns. What's your rationale there?
I'm paranoid. I expect economic collapse. And so I, for example, own, in addition to a lot of gold and guns. So admittedly, I do keep the gold in the bank. So maybe that's not smart because I can't access it when the banking holiday comes. But I have land. But I buy things like, for example, the other day I bought what's called a skid steer. A skid steer, for people who don't know, is basically it's kind of like a outdoor forklift you can attach stuff like shovels to and a variety of other equipment. It's a physical asset. My skid steer, if inflation goes to 1,000,000%, is going to be worth a lot of money. So physical assets, obviously, most people can't afford a skid steer. They're expensive. But if you're buying physical things makes more sense than investing in things that are, frankly, ephemeral. And you saw this is a complex topic, but so the German hyperinflation of 1923, people went to almost any length to buy physical assets like washing machines. And in that case, the stock market went up because in the 1920s, the stock market represented largely companies with a physical claim on physical assets. Now the stock market represents mostly ephemera, like Facebook. Facebook, it doesn't have any actual value whatsoever, except to the extent it can be used to further consumerism through advertising, relying on low interest rates. So the stock market is not a safe hedge against things like inflation, simply because it doesn't represent anything, or to a large degree. I mean, Exxon represents something that has real value, but many aspects of the stock market don't represent anything that has actual, real, permanent value.
Did that philosophy of yours impact your decision as to whether or not to take Mansfield King public at any point?
I debated taking it public, but I wouldn't have wanted to put up with the hassle of that. I mean, as an M&A lawyer, you dabble in securities and companies going public and private and so on, going private. But I'm familiar with the whole SEC process and so on, and I would never want that level of annoyance. So you're right. I probably could have gotten more money out of it if I had taken it public ultimately, but that just wasn't something that I wanted to put up with, frankly. But by the end, the last several years, I really wasn't working hardly at all, and taking it public would have just been an enormous amount of effort and risk.
Okay, well, on that note, let's end it here on advice for the young. So, if you were 20 years old today and you wanted to start any company, what advice would you give your younger self?
Specifically about starting a company.
Yeah.
Yeah, I think that I touched on one thing, which is that I think most people who can get over risk aversion can be successful as entrepreneurs if they can only get things done. So, well, I wouldn't recommend starting a restaurant, for example, because I think that's a bad business. I'm fairly agnostic about the area that one should become an entrepreneur in, because I think as long as you select something that's a legitimate business that isn't completely commoditized or it doesn't compete on, isn't swamped with cheap Chinese goods off Amazon or something like that, you are likely to be successful as an entrepreneur if you put your shoulder to the wheel. I do think, that being said, that people should look for our hypothetical 20-year-old should look for businesses that are not sexy. That is, everybody hears about tech and they want to have a tech company and so on. And yeah, you can make a lot of money that way, but yeah, it's harder than it looks, and there's a lot of competition. I'm not saying that everyone should go into shampoo manufacturing, but shampoo manufacturing is an example of a business that no one thinks of, yet is a great business, as I'm living proof of. So I think you want to look around at areas and say, what do people need that is not swamped with foreign competition that I can get into without having to borrow $10 million and build as I go, simply through execution, because so much of it is simply execution. And just getting started is the biggest thing. Most people think too much and don't act enough. And obviously you can get in trouble acting without thinking, but if you sit around and you have to convince yourself of the precise path of the future and what the future will hold, you will never be successful. You just have to get started.
I watched a recent interview with Jensen Huang, CEO of NVIDIA. The interviewer asked him, if you had to go back, relive your youth, start a new company, what company would that be? He said, I wouldn't do it. He said, I wouldn't go through that abuse. And he said that the people who are successful entrepreneurs are somewhat oblivious to the pain that they're about to face, which is, I'm paraphrasing here, which is why ultimately they've chosen to do it, because they don't know how hard it is. Do you agree with that sentiment?
Absolutely. I mean, you just have to accept that you're going to have tough times, and you're going to have privation and so on, and you just have to accept those things without thinking about them over much. He's exactly right.
Did at any point in your career as an entrepreneur running Mansfield King, did you want to quit?
No.
Even though times may have gotten tough and you may have gotten frustrated inevitably?
Yeah, no, I mean, I spent a good 5-10% of my time calculating catastrophe scenarios, like how I could liquidate if it all came crashing down on me. But I never considered quitting. I loved every minute of it. It was awesome.
Okay. Well, you mentioned people should look for things that aren't crowded. Can you give us an example of something that isn't necessarily sexy in 2023, but people still need, maybe may not have a lot of competition in the space already?
I think mid-market, mid-level manufacturing is something that America is still very strong in. I mean, people say America's manufacturing base has been hollowed out, and that's true, but there are still a lot of manufacturing going on. And so shampoo is a good example in its characteristics. There's not a lot of foreign competition because there's no time in that market to get stuff from overseas. That is, you can't, clothes you can ship by air freight, but you can't ship air freight shampoo from overseas in any cost-effective way. So that's a kind of inherently something that is more dominated by domestic manufacturing. So you want to look at something with enough friction that you don't have an excessive degree of overseas competition.
Okay. And finally, what's one or two interesting things you've learned about the shampoo business that you didn't know before you started the company?
All shampoos are the same, more or less. So if you're spending big money on shampoo, you're probably getting suckered. The same is not true for styling products. And that what's another interesting thing? That the shampoo is probably my only interesting thing I could say. I mean, there's lots of interesting technical things about how one makes shampoo and soaps and shaving cream, but I'm not sure those are interesting to anyone who's not a shampoo geek like me.
How should we pick shampoo at the pharmacy store?
Cheap.
That's it? I mean, I'm not getting a lower quality product if I buy the cheapest one on the shelf?
Shampoo is a surfactant-based product, which basically means that what it does is as a result of the chemicals in it, it uses a positive and negatively charged particles to ball up and get rid of dirt on something, your hair in this case. And that's all basically the same chemistry. And so buying something that's more expensive because it has, acacia extract or something does not actually change its efficacy.
Well, why is another brand more expensive than, is it just marketing?
Yeah.
Okay, all right, fair enough.
No, that's not true for conditioners or styling products. Those things are functional, but because they add something back to the hair. Shampoo is designed to subtract something from the hair, and so if it's not doing that, it's failing in its purpose.
I understand. All right, well, fascinating. We'll continue our talk about personal hair products another time. Where can we learn more about you and your work currently?
I write. I'm on Twitter at The Worthy House, at The Worthy House, and my site is theworthyhouse.com, where I write on entrepreneurship and history and politics and other topics just for fun.
Okay, well, thank you for sharing your wisdom with us. Maybe we can do this again sometime, despite the fact that it's just for fun. This has been a very great talk, so I appreciate it.
Thank you.
And thank you for watching. Don't forget to like this video and subscribe.